Hi there. Good morning, everybody. This is Kleber Hernandez from Kines Learning. It's a pleasure having all of you here to watch this interesting live event live about the 7 common mistakes in financial modeling. I've been working with financial model with more than 70 years now, and I got to a conclusion that many times people get mistakes by doing wrong links in the model, wrong values, inserting wrong values as well. And now it comes down to one thing: the person is under pressure. So it's very common in transactions, as you guys can appreciate when you're working in an investment bank or can be working in a even in a corporate world where you have short timelines, short deadlines to execute your transactions or your tasks. And many times under pressure, people make mistakes. I was no different in the beginning of my career. I used to make many mistakes as well. And over time, I managed to learn. And I want to share today a few of these, let's put it this way, secrets that can help you all to overcome those issues in your own models. For those who don't know me yet, my name is Kleber Hernandez. I'm the owner of the company called Kines Learning, which provides training courses for Excel and financial modeling. I'll cover in more detail later on, but now let me deliver to you guys what you guys want to see, which are the seven critical mistakes that you have to avoid at all costs when you are doing your own financial models. So let's start. I will start by sharing my screen. Just a second, please. And let's deep dive, jump to the model. I think everybody can see my screen here. As I said, there are 7 mistakes. So there will be 7 spreadsheets that I will show, and then we can go from there and see what are the mistakes that you need to avoid. First, let me give a bit of the background here. This is a typical model that I cover in my training, Kines Financial Modeling Coaching Program, which is at kines.com. For those who are interested, you can see there in my website. Right here, I have the landing page for the training course. But anyway, we can cover that in more details later on. Here at the model, we can see a few sheets that you need to fill in order to have a complete model. So first of all, you have the cover sheet, then an executive summary, which is the outputs of the model. It follows a very logical sequence using best practice financial modeling. Then you go to the next topic, which are the assumptions of the model. That's pretty much where you have the key single assumptions of the model. And I say single because there's another set of assumptions, which is called scenarios, the sheet 4. And this one, we have the most critical variables of the model, which might not necessarily be set in stone. They might be unpredictable in nature. And by the fact that they are unpredictable, we need to create scenarios and run different scenarios in the model, like low case, base case, and best case. Then you have the final calculation part of the model, which is the sheet number 5, calculations. Here is where we structure all the calculations across the entire business model, the entire financial model. So we start with flags, then we move to revenue. So all revenue calculations are set there. All costs split in variable and fixed costs. We cover here during the course all the elements about operating leverage, which is quite useful when you are starting out your financial modeling activities. Then forward, we have also the P&L, cash flow, and balance sheet. As you can see here, we're going to have some mistakes which are not supposed to be here, and that's the reason we're making this live, because we need to uncover issues, why the balance sheet is not balanced. If you guys are accountants or finance professionals or even financial analysts at the beginning of their career, you might appreciate that a balance sheet needs at least to balance. And in many models, especially many advanced financial modelers, I can see that sometimes they struggle to balance the balance sheet. And that's a critical issue which we're going to cover today. Then after that, we also have the CapEx schedule, income, working capital schedule, and then the capital structure, which is split in debt schedule and equity schedule. Of course, we have a limited time today. I'm not going to go inside each of these calculations deeply or how to make the model from scratch. It's not the scope of that. We have our training course for that. But I decided to share with you for free these 7 tips. As well, the dashboard with contains all the charts to make your insights from the model become more clear. But that's part of the model that we covered in the Kines Financial Modeling Coaching Program. So let's go back here to calculations, because we're going to cover now the first issue that we can see when you are trying to balance the balance sheet. It sounds basic, but Again, sometimes we might be under pressure, we might not notice things, and we do mistakes. Everybody does mistakes. So let's see here what's happening. In this particular one, this first mistake, so that's the number one, we have assets not matching liabilities and equity. You can see the difference here. The formula is straightforward. You take the total assets, subtract the total liabilities and equity, and then you see that there's a difference here. What the first issue that people do is when they do not sum the totals correctly. By totals, I mean all the major totals like total assets, total liabilities, and total liabilities and equity, or the subtotals like shareholders' equity, long-term liabilities like this one, current liabilities, and so on. In this particular one, I did it on purpose, but the total current assets, as you can see, is not considering the inventory levels in the model. So when that happens, of course, there's going to be a mistake because the balance sheet will never balance if you do not capture all the cells correctly in your model. So make sure that you are taking the entire range when you are making the calculations. One way to avoid that is to press Alt equals to access the shortcut auto sum. When you do that, you press Ctrl Enter, you sort the same issue the same way, and then you can expand to the right to make sure all formulas are correct. You can see they are not at the moment. You take the correct formula here, press Ctrl Shift arrow right, and then F2 and Ctrl Enter. By doing this, you are copying the formula, the correct formula, across the entire projection, but at the same time, you are keeping the formatting in place. So you're not distorting the formatting, which can be quite annoying for someone looking at the model. Okay, I can see a dotted line here. It was there, it's not there anymore. What happened to the bold effect and so on? To avoid that, use the correct shortcuts. If you guys are interested in this topic, I can cover more details, the shortcuts necessary for financial modeling. We can make it have a you can have a separate live just for that, and we can go through details if you guys want. Let me know in the chat. Type one if you want to see more information about shortcuts in the next live events that I will have with you. Okay, so this was the first shoe. I promised seven, so let's carry on our list. The second shoe is about wrong links. And believe me, people do that all the time in Excel. When they come to Excel, they wrong links is usually one of the most biggest issue that makes your model not balanced because basically we're taking information from different cells. And in this case, the issue comes down not with a balance sheet account, but with a depreciation account. So let me get back here to the row 97 where the problem is. So depreciation and amortization is a non-expense, non-cash expense that you need to factor in the cash flow. If you guys have some knowledge in accounting, you need to figure out that a typical cash flow, operating cash flow, it starts with the net income, then add back non-cash expenses like depreciation, amortization, and also deferred income taxes in this case, and you add working capital at the end to calculate the operating cash flow. But the problem is that this is a very tricky one because at a first glance, you look at the numbers and you can see, okay, net income is linked to the P&L. That sounds fine. When you look at depreciation, it's linked to depreciation. It's okay. Deferred income tax, everything seems to be fine. Working capital is further down, linked here. Okay, seems to be fine. But when you look at the balance sheet, it's also not matching. So it's correct in the first year, and then suddenly there's a zero point 0.4 difference, zero point 0.6, and then that's a growing increase here. So it looks like there's a variable that we're linking with a lag, which means like we're missing 1 year, probably. And that variable, of course, you need to go one by one and check the details, see the formulas, consistencies, and so on. But in this case, is the formula of depreciation amortization. As you can see, we're taking a number from 2024, right? Look at the column here, 2024, and we're linking that to the previous year, 2023. So that's not correct. You always need to link in the same columns that you are. So if you have numbers from 2023, keep in 2023, and the same thing for 2024. So in this case, all you need to do is take the mouse here and drag this selected area to the right position, just so the depreciation feeding the cash flow comes from the P&L, the depreciation from the P&L of the same year, 2024. Of course, after you make this correction, now it's corrected, as you guys can see on the screen, you just go right and expand it. And here, a quick way is to press Ctrl R to expand the entire projection, the same formula to the entire projection. So you can see here visually that's correct. And at the bottom line here, the balance sheet, what happens? It balances again. So make sure that you are paying attention in the wrong links as well. So that's another topic that you need to be aware of. We're moving fast now, as I promised, straight to the points. So the next question is about cumulative balances. So again, I'm taking the same model that I cover in the Kines financial modeling coaching program, and I'm highlighting here other issues. In this case, the third error common with financial modelers, as you can see here, the balance sheet is not matching, is related to cumulative balances. In this case, what I mean by cumulative balances is all these scheduled balances that you have at the end. For example, we have a balance that starts with a position like property, plant, and equipment. You add capex, reduce account depreciation, and then you get to the end of period balance, EOP balance. So balances like this, you need to make sure that you are adding all the correct figures in the correct order. So it's not just a matter of link, but you need to make sure that you are capturing all the correct links inside the formula. So you cannot forget any of them. For example, here, if I forget capex, then the balance is wrong. If I consider capex but forget accounts depreciation, the final balance will always be wrong, and the balance sheet will never balance. Once again, don't feel pressured. Make sure you correct your calculations while you're doing the model. Always double check, and then you can avoid this type of situation. So in this particular case, we can come down here to the balance of deferred tax liability. They schedule 8.3 in our model. Here, the idea is to have the balance as the sum of the beginning balance of deferred tax liability plus any increases that you have along the way. So we modeled income tax correctly in this model. Everything seems to be fine. But look what happens at the balance. I'm just considering the beginning balance. So that's another common issue that you might face if you are rushing too much to your model. So in order to correct that, you need to add that balance. So as we saw before, balance sheet here in the red dotted line is different. There's a difference there, should not exist. So come back to this cell and then add the increase just so you have the correct formula in place. Once again, Control R to expand to the entire function, right, to the entire forecast period. And then when you come to the balance sheet, it balances once again because all the movements again between P&L, cash flow, and balance sheet, they are synchronized. They are all linked, aligned. And that's what you need to make a balance sheet balance in any model. We cover in details how to structure the model in our training, but here I'm just making the highlights of the major mistakes. So that was the error number 3. Let's now move on to the error number 4. And at the end, I can leave some space for questions and answers. I'll be glad to answer any questions that you guys may have. But let's carry on in our life here and go to the error number 4. And the error number 4 is about sign issues. So you use plus instead of minus, use minus when we're supposed to use a plus, and that makes a complete disaster in the model because you lose track of what should be the correct data and the correct value and sign in your model. So in this case, we have a different error of the model. We're looking now at the row 103, and that's related again to cash flow. But this is a trick one, and we see this mistake all the time at junior modelers because when they look at the capex, for example, they calculate the capex, they have the capex schedule, they take the capex schedule like this one, take the real variable, collect from the scenario, calculate the inflation index, make the nominal capex, everything's beautiful, everything's perfect. But when you link the capex to the cash flow, what do? You use the wrong sign. By definition, capex, which means capital expenditures, means cash outflow, is cash going out of the business. You might argue, okay, but I'm acquiring things, I'm acquiring assets, buying assets from a company, yes, but you are increasing your physical assets, but your cash position is going away. Either if you are financing that or your own equity, the money is in fact going away. So that needs to be reflected with a negative sign. At the moment, the balance sheets down here, you can see the difference. Which actually the difference is actually the double of the amount of the capex incurred in each period. Which means that if you use the correct sign, it will offset. Which means that if you use minus this amount, you can expand the entire row. So the same formula using minus the capex, it means cash going out. Then the balance sheet will once again balance because you are decreasing your cash position and you're also increasing the other asset, which is the physical asset or property, plant, and equipment. So increase property and equipment by decreasing the assets. These transactions offset each other, which means the balance sheet will balance. If there's no other mistake, just that one, by using the correct sign, you also fix your troubles. So that's another error that I can see many financial planners doing, and it should not be your case because you know how to do it. And let's move on to error number five. Error number five is related to hard-coded values. What does that mean? Hard-coded values is pretty much when you are typing lots of formulas in your model, and suddenly, instead of a formula, you just insert a value. And then you carry on with another formula, and then another formula, and so on. But there's a value in the middle, one or more values in the middle, that maybe you sometimes use for some stress scenarios or you were trying to assess a specific calculation, but you forgot the number there, which doesn't make sense. You cannot leave hard-coded values in a model. That's part of the best principles that you need to use, best practice principles that you need to use while doing your financial model. So this error number five in this case is in the row 132. I have a note here to help me, to guide me here. And then what I have here is basically this. I have a sequence of 6.8 million in the accounts payable. So this is the balance sheet. In the balance sheet, I'm looking at the liabilities and equity, specifically in the current liabilities and specifically in accounts payable. All the mechanics of the model are set here, right? The formulas are in place, correct, connecting to the right schedules. But when it comes down to this specific one, for some reason, the financial modeler was trying to understand the question: what if I keep 78 million in accounts payable flat throughout the entire projection? Okay, you did your assessment, you got some conclusions, and then you should go back to the correct formula. Well, look what's happening here. Balance sheet is not balanced because basically you have numbers instead of formulas here. When you press shortcuts to display formulas, you can clearly see that. And then let me see if I can. Yeah, now I got it. Press a shortcut, and then you can see here that you have formulas all around, not in the yellow part because that's actually an input of the model. These are actual numbers, but the projection part should be all formulas. And suddenly you see numbers here. Suddenly you see these numbers, which doesn't make sense. Let's get back to the normal visualization. In order to eliminate that issue, you need to use the correct formula and copy it across the entire projection. When you do that, using the shortcut F2 Control Enter, you can see the balance sheet is once again balanced. By the way, sometimes we see one mistake in isolation, then another mistake in isolation, like we are doing now. But a good financial modeler will see and understand the mistakes in combination, which means that in case you see more than one issue in the same financial model, you need to tackle all of them. So make sure you do all the auditing process like we're doing now, and then you can completely fix the model if you know how to fix all the different types of problems. So that was the error number five. There are two more errors to go. I'm speeding up a bit here, and I'm gonna leave space for questions and answers if anyone wants to ask me any questions soon. So let's move on and let's start error number six, which is related to inconsistent formulas. So that's another common issue that I see, and this one is particular to the working capital of the project, working capital of the model. So we can come to this sheet calculations again, and let's move on down here actually to the row 228. So here is the problem. We can see here that the net working capital has been calculated as the sum of accounts receivable plus inventories minus accounts payable. For a net working capital, which measures the movements of working capital accounts in the balance sheet and in the cash flow, it's correct. So this formula seems to be right. At the first glance, you don't understand what's wrong. But look what happens after some point. When you're moving the cells right, you can see that from this year, 2026, on, for some reason, the person wrongly used the addition instead of the subtraction in the formula. It means that accounts payable is now being added to the net working capital. And it should as the theory says, it should be excluded because you need to see the whole cycle of the business. It means whole working capital cycle means the sum of receivables and inventories minus whatever you have to pay minus. So in this case, let's correct the formula to make sure this is correct. Before I do that, before I expand, you can see in the balance sheet that there is inconsistency here, and that inconsistency will be eliminated after you expand the formula. Because now you have the correct net working capital in place. So you add receivables and payables, add receivables and inventories, and decrease payables. By doing that correct approach, you have a balance sheet once again that balances. That's another typical thing we need to do in a model when you are working in a complex integrated three-way model like this one. And finally, we come to the last error that you should know of, which is related to the link between cash flow and balance sheet. Remember, any financial projection that you needs to correctly link P&L, cash flow, and a balance sheet. In this case, a common mistake that people incur is making the final links of the model. By final links, I mean this. You created all these schedules in the model. They are all beautifully done, correctly calculated. And at the very end, you start connecting balance sheet accounts. When you connect all those accounts, provided, assuming that you calculated everything correctly, when you make the final links between cash flow and balance sheet, the balance sheet should balance, basically. Because it's a cumulative process. The more you get right at the beginning, the more you get right at the end. If you got wrong calculations at the beginning, wrong balances at the end. So in this case, the issue that we have here is in the row 98. So look here that the deferred income taxes is missing. So it's another common issue that people make is when they forget to link certain elements here. So in this case, we need to link this with the row 86 from the P&L, which is the deferred income tax. Remember, in the cash flow, we need to add two non-cash expenses. So the first one was depreciation amortization. The second one is deferred income taxes. So what you have to do is use a minus sign because we're reverting that amount. We are adding back that non-cash expense, and then press enter to correct that. Once you expand it to the entire projection, then you look at the balance sheet again down here. Now it's properly connected with those accounts. So the link itself here is done through deferred income taxes. And remember that I talked about the schedules, right? So once you come out here, you can see the schedule correctly calculated. So you have the balance here. So it starts with 60 million. Then you add 1.6 increase in the deferred tax liability, and then you come to 17.6 total points. So this figure is fitting the balance sheet. 1.6 is fitting the P&L. However, this is a non-cash expense. So you start the P&L with the net income, which was considering initially the non-cash expenses of 1.6 million, and then you add back that expenses because it's non-cash, which means there's no movement in cash position. By doing that, you get the correct figure of operating cash flow, and summing the investing financing sides, you're going to get the final cash position. That final cash position, guess what? It fits what? The balance sheet. So if we start the correct calculation deferred tax, it will circulate all the way through the P&L, cash flow, and you fit again the balance sheet. And that's what makes balance sheet balance. So that's another trick thing you need to know while modeling your transactions. So now that's the end of this short live event. But I have some final important messages for everybody watching this event, which is related to the training that I promote here. I have here this presentation, which shows the three different training courses that I have at the moment. The first one is called CAF 50. CAF 50 means Excel functions, and 50 is because this course covers the 50 most useful Excel functions for finance professionals. So if you're interested in learning specifically functions, in developing specifically this particular skill set, I recommended this course for you, which is just $99. It's very cheap, and you can enroll in the course straight away and start learning straight away. Now, if you already have some decent knowledge of functions, or even if you want to know more about functions, but not only functions, you want to have complete view of Excel, then I recommend the course Excel Master. Excel Master is a complete 14-hour training covering all tools, functions, shortcuts as well, and many tips and procedures of Excel that you can do in Excel. In this course also includes live classes like this one, but specifically guided to Excel issues that you might have while working in your job. So I recommend that because you can have a lot of support here. You have a forum where you can ask questions. You have live events happening every month, twice a month. So that is going to be really helpful for you if you're interested in developing your Excel skills. By the end of this training, I can guarantee you're going to be flying in Excel because I really dedicate a lot of time to this course together. So I'm sure you get the best of it. And finally, related to the live event that we had today, this live class, I have the Kids Financial Modeling Program. The Kids Financial Modeling Program is only for the price of $999. We can work out some discounts here, as I'm showing in a second. But let me talk a bit about this program because it's not just a training course; it's a coaching program. So you're not going to only watch lectures and do all your exercises and quizzes and so on, but you're going to be coached by several live classes covering basic elements of financial modeling, just like we did with the spreadsheet now that I show you, but also some advanced features like cash sweeps, valuations, how to work out with different debt instruments in your balance sheet, how to put everything together, making sure that the assessment is done, the balance sheet is balancing, and everybody can see the outputs and understand them clearly. So that's a very, very comprehensive package. All licenses here across the three courses are for one entire year. So make sure you subscribe to one of this training because that will really help you not only as the course for a quick and go. No, it's not like that. It's an entire training for a coaching program in the case of KFM for an entire year. And by the way, if you purchase KFM, you also have free access to Excel Master. So you don't need to buy it. The Excel Master comes as a free bonus in case you buy the KFM. Now, a few important final tips here. Basically, again, I'm showing here some important links. This one is related to the sales page where I offer my course, Keynes Financial Modeling. Here, you can enroll the course directly. So I explain here that that's where the place where you build an integrated three-stage reflection model. I showed the mistakes just now in this class. If you enroll in this course, you're gonna know how to do everything from scratch. It's really a step-by-step guide where you can get the support that you need. And talking about support, I mentioned here also that you have ongoing support. It means that you're not going to only watch lessons and then, okay, now I'm going to practice. I'm not going anywhere, and then the structure is not there. I'll be there doing live events. I'll be there from forum for questions, and also I'll be by your side when you need to submit your model to make sure you are doing everything right. So what means that once you get your model done, even if you have mistakes on it, make sure you submit it to our platform when once you have access to the course. And then I can review your own model, see the mistakes that you're making, and then I'll send you back comments to make sure you can correct them in your own file. And then can interact that as many times as needed. This is part of one of the assignments that I have in the training course, and that really helps everybody to get a good picture of what they're doing right and what they're doing wrong. So you really need that kind of mentorship, that kind of coaching to become expert in financial modeling. I don't need to tell I don't need to tell anything about that, but have a look at websites like A Financial Careers, Total Jobs, and so on, and then you can see how much financial modelers are getting at the moment. It's a really good money. It's a really good question if you develop the skill set that the market is required. And I'm here to help you through that journey. Finally, I have another link here, and both links, by the way, both links are down here in the legend, in the description of the YouTube live events. So you have my website, and there's also this link here, which I recommend you do right away to guarantee your spot in a completely free consultation, 30-minute video consultation with me in a way that I can access your financial modeling, and Excel skills. So I call free Excel and financial modeling assessments. All you need to do in this page that's there in the description of the YouTube, you go there, click on this link, you're gonna get to the same page that I am, and then you can select here one of the dates and times that I have available and book, literally book a slot for having a free conversation with me for 30 minutes. And that's the moment where I'm going to cover every single detail that you need to know to improve your skill set. I've been doing this for 17 years, so I can see the struggles that a person has immediately. I can see if it's shortcuts, if it's financial modeling, background around financial statements, if it's something related to pivot tables, you name it. I've been doing this for a lot of years now, and I can clearly see the people's difficulties in certain aspects related to Excel financial model. So go ahead, make sure you can select a date and a time here to talk to me. I look forward to hearing from you. And also, final two comments. I also you can see that I also have a WhatsApp icon here for those that want to check through the phone this live, or later on we would like to talk to me. Just drop me a call here, or just text me here actually, and then I can get back to you, make schedule a call, or send you an audio message, just so if you have any questions, I can talk to you directly here. And finally, just make sure that everybody is comfortable moving ahead. And for those that are serious in committing to this program, I can give you away a free 10% discount. So you're gonna actually by, be paying 90% of this price for the KFM course. If you do that today, just let me know. Send an email to info@kinas.com with the word Kinas 10, just so I can have a reference for people that are watching this live. If you send an email today with the title Kinas 10, just that, you don't even have to write anything there. Send an email with that title, and then I can send you a coupon, a 10% coupon. So when you go to the checkout, you pay less. This is only valid for today and only valid for those watching this live event now. So make sure, take some action now. It's up to you. You have all the skills that you have all the skills and all the support that you need to move ahead and try to improve this important skill that the market is demanding at the moment. And it's up to you. All the resources are there. I'll be available for you if you need anything. And let me know if you have any questions. I'll be happy to chat with anyone, and I'll be around to support anyone who needs to grow and who wants to grow in the finance industry with this important skill called financial modeling. Maybe you never heard about it, but have a look at the market, see how people are getting paid and how fast they grow in their careers. And I'm sure that you'll be successful if you take the right decisions. So I look forward to hearing from you. All the best and see you in our next events. All the best. Bye bye.